Hi guys, welcome to the channel. So as of last week, I decided that I'm going to start a challenge. I'm going to turn this account from 25k all the way to 100k, and I'm giving myself around 2 months or 10 weeks before that happens, right? So as of this past week, I started my account at 25k, and this past week I grew the account roughly 8.4k, right? So pretty good amount, pretty like 30% gain for the past week, which is pretty good, and I'm doing so only by playing put credit spreads or call credit spreads, right? And as you know, for me, I don't like playing naked options because there's a lot of data burn, there's a lot of risk and uncertainty. I like playing data gain, for example. I love playing put credit spreads as well as call credit spreads because you just have so much more power to you, right? If you're very good at macro plays, then it gives you even more power. Some of the plays I'm looking for this week are Zoom, Crowdstrike, Sienna, and Avgo, which is Broadcom, right? Let's get into Zoom real quick. Let me show you exactly why I want to play Zoom. Well, looking at the daily chart, right? This is extremely bullish chart on Zoom, and I'm looking to open a put credit spread around these two volume nodes at 255 and 245, right? You can tell there's a lot of volume on these nodes, meaning there's a lot of support. So I'm looking to open a put credit spread right below the support line. So in case Zoom does crash down, I have a good cushion for it to rebound or for it to stabilize in a sense, right? Looking at the 1 week chart too, you can tell that it's very extended, right? But this was back from 2019. So you can tell that, it took a leg up and now it's looking to stabilize for another run or decide where I want to go. So you can see over here that the big volume node is around 254, right? So if you open a put credit spread at 255, you should be safe, but even safer would be at 245, right? So let's go to Zoom real quick. Let me show exactly why I'm getting to Zoom. If I go to options here and look at their option sentiment, I'm able to see that 80% of the current contracts open on Zoom are bullish, while only 20% are bearish. So a lot of people are betting for Zoom to go up, which is really good, right? Let's look at their implied volatility. The good thing about Zoom is they stay within their implied volatility after earnings, right? Zoom has their earning report on Monday after hours, right? So Zoom stays within their boundary during that, right? So it's kind of an easy stock to play, meaning it's not as unpredictable as other tickers can be, right? So that's pretty good. EPS versus actual, right? What's their earnings per share and what's their actual surprises they have or estimates they have. So from looking at this chart, they haven't had many earnings per share reports or earning reports, but they have beaten every single EPS estimate as well as beaten every single revenue estimate as well, right? So that's pretty bullish on that stock as well. And just looking at the stock patterns, right, you can tell that that the earning Zoom generally for the past two earnings have went up around 7% each, right? So that's pretty bullish to me. And I can understand that, hey, after a few days after earnings, the stock usually pulls back a little bit. People are taking profits. The stock will have a dip. So that's good for me to know because I'll be looking to get into Zoom on Monday and I'll be looking to close that on Tuesday or Wednesday, right? For roughly a 10% gain. I'm looking to make maybe $2,000 or $3,000 playing off Zoom, right? The next stock I'm looking at is Crowdstrike, right? Crowdstrike is a Wednesday play. Their earnings report is on Wednesday, and just looking at their option sentiment, they're 72% bullish, right? So a lot of people are bullish on Crowdstrike. Even their 5-day average is very bullish. It's kind of like Zoom. It's a lot of people are betting this company will exceed their expectations. So let's look at their implied volatility. So over here, we can see that it's kind of volatile, right? It'll go up past their implied volatility, but, it's beaten more times than it's lost in a sense, right? So in the past two earnings report, it's actually went up the past two times. Let's look at stock patterns. Yeah, this is a very great chart. So as we can see from our stock patterns, it moves up pretty fairly well during earnings, right? Beforehand, it'll climb 15%, 16%. This is in total, not each day, right? It'll climb, for example, So sorry, pardon me for my rant. So yeah, it climbs going into earnings, And then for the earnings move, for the earnings day, it will usually shoot up 8.4% or 20% or 2% or 17%. The downside is very limited, and Crowdstrike is a cybersecurity company, so they're very hot in the the COVID economy, the COVID atmosphere that we are currently living in, right? So I'm looking to play this, and you can tell from over here the data shows that it usually dips after their earning reports, right? So I'll be looking to close this as well after, let's say, a day or two after earnings, right? So if I open this on Wednesday, I'll be looking to close this on Thursday or on Friday, right? Depending on how the stock does and just overall just overall how the stock does. So let's look at EPS and actual. Let's see exactly how often do they hit their earnings and how often do they miss it. So it looks to here they've beaten every expectation, and they've actually beaten every revenue estimate as well. So that looks really good. They haven't missed ER, they haven't missed revenue, and they've increased their guidance each and every quarter, which is great to hear. Right. Next company is Sienna. Let's look at their option sentiment real quick. So Sienna actually, they have a bearish option sentiment, meaning 58% of the contracts that are being open right now are puts. So Sienna, I'm looking into for a call credit spread. Basically, I'll be betting that Sienna does not go up, right? Because most of the contracts here are actually bearish. So I'll play that in mind. And pardon me, that's actually the 1 day total only. So if you look at the 5 day average, it's kind of 50-50, right? People don't know whether it's going to go up from their earnings or whether they're going to go down, right? So let's look at their implied volatility to understand, based on data, based on history, where have they gone? So based on history, it's usually stuck in between their implied move. But whenever they do beat, they beat hard and they run, right? They don't run just 5% or 10%. They run 20% in a single day, right? But they've never had a loss where they've dropped below their implied move. Okay, and let's look at the stock patterns, right? Let's see exactly what happened to the stock beforehand, right? This is extremely bullish, right? Their opening gap is almost all positive, right? For maybe one time or twice in the past 15 ERs they've had a negative opening gap, which is perfect. This means that after earnings report is released, the next full market day that the stock opens, it opens at an increased value from the day before. So you can see that the last time, you can see from last quarter's earning report, Sienna actually climbed before the earnings, right? So you know what? I'll be playing this as well. I'll be opening this position on Monday, and I'll just let it climb all the way up, and I'll sell before either earnings report, or I'll sell after earnings, right? Maybe on Thursday or Wednesday. So I'm looking against the Sienna as well, and let's look at their EPS estimate versus actual. So it looks like sometimes they'll beat, sometimes they won't. But the times they don't beat, they don't drop by too much, right? They've beat on revenues. So for a company like this, which is a little bit smaller company, revenue matters a lot more than earnings per share, in my opinion. So look at the revenue and look at their guidance, right? As long as their guidance is going up, then the company will increase in value, right? So a real quick thing, right? BMO means before market opens, and AMF means AMC means after market closes, just so you know the time of the earnings being reported. And let's look at the very last one, which is Broadcom. So for all these tickers, right, Zoom, CrowdStrike, Sienna, and Broadcom, I've actually played all of these tickers last quarter, so I have experience on them, and I've won every single play. So roughly, this week, last quarter, I made around 40% of my portfolio in that 1 week, which is around, let's say, $10,000 back then. So let's look at these order sentiment right now. Right, there's 77% bullish sentiment right now. Okay, so a lot of people are betting that Broadcom is going to beat. And I remember last time when I played it, the same thing happened. Right, there was a huge bet that they would beat, and that's exactly what happened. So I'm looking at all this volume over here on this end, on the bullish volume, and I'm going to be playing accordingly to that. Right, so their option sentiment is looking very bullish so far. Let's look at their implied move to see exactly how they move after earnings, right? You can see that over here that they don't, like they usually stays within their implied volatility. They don't go down and then crash, right? For this, I'll be playing a put credit spread. So I'm basically going to be betting that it either stays still, it either stays flat or it goes up, right? That's what I'm going to be betting that Broadcom does, right? So this looks very perfect, right? The reason, whenever you're looking at implied move versus actual move, you want to see if it stays within the gap. If it stays within the gap, then that's beautiful, right? That's exactly what you want. Let's look at stock patterns now, right? To see, how does the stock move before earnings was reported, right? So this March, we don't really need to count that because that was a COVID crash, so everything was going down the day before. Let's look at June. So June, you could see that the value of the stock, it climbs before earnings, right? The value of the stock will go up exponentially right before earnings released. And based on the earnings move, the past 2 times was bullish, and the previous 3 were actually bearish. So I'm going to be looking into this, just understand why these 3 previous times were bearish. Maybe it was some news. Maybe they lowered their guidance. Maybe it was the overall economy at the time. Maybe it was trade wars with China. Like, who knows, right? And so I played the last ER, and they won. So I let my position expire, and I secured full profits. And you can see over here that after they won last time, it kind of stood still, which is exactly what I wanted to happen. Which I want to happen, right? Which is perfect for me. So I'll be looking to get to put credit spread on Broadcom and just riding it up. And before earnings, I could sell. I could secure whatever profits I have thanks to Theta Burn, or I could just let it expire and secure full profits, right? So looking at EPS versus actual, over here, like last time, they hit their numbers right on the dot, right? But they had a revenue surprise. So, sometimes Broadcom does not hit their revenue numbers or their EPS numbers, but I believe that this time around, this quarter, they are going to beat both revenue and EPS based on my experience playing the ticker.